Hi there, I'm Cal Ewing with investmentpropertyusa.ca, and I'm here to tell you about a little known strategy, especially here in Canada, that investors are using down in the United States to find properties for literally pennies on the dollar. And if anyone knows anything about real estate investing, one of the key principles or one of the key things that everyone's looking for is properties that are available below market value. And buying undervalued properties is how you get instant equity. It's the basis for your flips. It gets you a head start when you're buying rental properties. So buying properties undervalued is a sought-after way of investing in real estate. Now, down in the States, they have these things called tax deed auctions. And how it works is the county needs tax money from property taxes to pay for teachers, to pay for roads, all the services that the county provides. They rely on tax dollars desperately to pay for these services. Now, if a property owner does not pay their property taxes, the counties and all of the states in general have come up with a way to collect on this money through the use of investor capital to pay for these expenses that they so desperately need. Now, tax deed states like Texas, where I invest in, how they operate is if a homeowner doesn't pay their taxes, eventually, after going through a big procedure and court hearing, that kind of thing, they eventually foreclose on the property. So this is a county foreclosure as opposed to a bank foreclosure. And when they sell these properties at the auction, they sell them for whatever is owed in property taxes, plus administration fees and some penalties and that kind of thing. So, for example, if a homeowner only owes a few $1,000s, say like I've seen properties go up for $2,000, if that is all that's owed in taxes on the property, well, that is what the opening bid is on said property. So as an investor, you can imagine going and bidding on properties that are worth anything from $50,000 to whatever, you name it, $200,000 and up. You can start bidding as low as $2,000. And obviously you can imagine there's going to be other people there, some competition at the auction, so usually the properties can't be had for that cheap, but it's still possible, if you catch the auction at the right time and on the right day, to get properties for considerable discounted prices. And that's the strategy I like to use in Houston, Texas. And I just wanted to explain a little bit more about how this works for people, because I get a lot of questions and some confusion on tax deeds. So as I described, these properties go up for auction, and as the investor in a tax deed state, as soon as you purchase the property at the auction, you're the full-out owner. So the title is in your name, you can sell it immediately, you can do whatever you want with this property, and that's really great. And there's definitely states that use this system. The problem that we've encountered is that there's big real estate funds and trusts that come in, and they have so much capital that they just go into these auctions and buy the whole lot, or they may even buy it from the county before they even come to the auction. And so it makes it really hard for smaller investors like ourselves to go and compete at these auctions when you've got these big funds coming in and they're willing to pay more for these properties, or they're just buying them all. So we decided that we wanted to invest in what we call redeemable deed states. And there's only a handful of them. Texas is one, Georgia is another, there's a few others I believe. And how redeemable deed states work is a little bit different than straight up tax deed states. Redeemable deed states have a redemption period that gets added on as soon as the property is sold to an investor, whereas tax deed states, the redemption period is already passed for the homeowner. So before the property goes for auction, the homeowner had a redemption period where they can pay the tax off and get their property back before it's auctioned off. Whereas in redeemable deed states like Texas, the property gets auctioned off to an investor first, then the redemption period is applied. So how this impacts an investor like myself is, if you buy a property at the tax deed auction, you actually have to hold on to the property for the span of the redemption period. Now in Texas, it varies from state to state, but in Texas, vacant lots, commercial lots, and some residential properties have a 6-month redemption period. Other single-family homes are called homesteads, and with a homestead property, I'll get into that in a future post, but homestead property, the redemption period is a span of 2 years. So during this redemption period, you, the investor, have to hold on to the property. But the good thing is, You can put a tenant in the property immediately. If you want to move into the property, you can, and you can even begin to fix up this property while the redemption period is going on. You just need to know that during that time, the previous homeowner can redeem, and how they redeem is basically they pay off what you paid for the property. If you're the investor, say the property, the taxes were owing maybe $2,000 on the property, and then you ended up bidding on the property and it went for $20,000, for example. Well, in order for the previous homeowner to redeem that property back from you, they have to pay you $20,000 plus a 25% interest. So as an investor, that's the worst case scenario of making 25% on your money, which is a pretty good deal. Now, most of the time, the previous homeowner does not redeem on the property because they were already in a financially difficult position and they couldn't pay their taxes when they were lower. They obviously can't afford to redeem their property when taxes are higher because they have to pay that extra 25%. So as an investor, you just wait out that 6-month or 2-year redemption period and you collect cash flow if you have someone living in there, a tenant in there. And then once that redemption period passes, you can then have clear title on this property and you can flip it, you can sell it. You're the 100% owner, free and clear, and there's no more headaches. So there is a lot of due diligence that's required when you're looking at these properties, and there's a lot to know in terms of the legalities of the counties and the redemption period and that kind of thing. And that's why I would like to partner up with Canadian investors who maybe don't know a lot about tax deed investing, but they see the value and the merit of it, and they just want someone that can educate them through the process or do all the dirty work, do all the due diligence down in Houston or wherever we're investing, and just keep it easy for them. So if you're one of those people that wants to find properties for literally pennies on the dollar and cash in on that equity when the redemption period expires, I'm looking for partners all the time. We're always raising investment capital and partnering up with investors. And the cool thing is you don't need a lot of money to get going. First of all, these properties can be had for really cheap, especially compared to most Canadian markets. But also, we're partnering up multiple investors here. So with $5,000 or $10,000, you can leverage the money from other investors that they're investing and get in on a property that you normally by yourself wouldn't be able to afford. And then, of course, you're leveraging myself and my power team, our experience, and all of our due diligence that we're able to do down in Houston, so you don't have to fly down there and do it all yourself. So if this sounds appealing to you, there's a few ways that you can get in touch with me and learn more. One of them, you can look up at the top of the page, there's a tab called Invest with Cal, and on there it'll outline different ways that you can get involved in our project. Or you can book a free 90-minute strategy session called Work Less and Earn More, and it's basically just to sit down with me where we talk about the fundamentals of real estate investing. I can answer your questions about tax deeds and some of our other projects we have going on, and just see if there's a fit. This isn't for everybody, but a lot of people have questions and need some clarification before they dive in. So this is an opportunity for us to get to know each other, for me to explain exactly what we're doing, and you to point out what your needs are, your expectations, and where you want to go financially. So if either of those appeal to you, you can click on Work Less and Earn More or Invest with Cal, and you can contact me through those pages and get a lot more information. So I hope that clarified a few things about tax deeds, and I'm going to keep talking about this in multiple posts in the future. I just want to give you a general overview of how this strategy works. So thanks again for watching.